Waste Management stock, ticker symbol WM. On the 24th of October, Waste Management presented their quarterly report where they beat on EPS but missed on revenue. For the upcoming earnings, analysts think they will beat again. Year to date, the stock is up 10%, underperforming the S&P 500. And people love Waste Management stock because of multiple reasons, one of them being the dividend. And I understand why, with dividend yield at 1.6% and with a long track record of paying dividends. So could this be the perfect moment to buy Waste Management stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Waste Management do? Waste Management is North America's leading provider of comprehensive waste management environmental services. Waste Management manages and reduces waste at each stage of collection to disposal, while recovering valuable resources and creating clean, renewable energy. In here we see the most recent earnings report. Revenue was reported at 5.19 billion, up from 5 billion same quarter year over year. Income from operations was reported at 1 billion, up from 942 million. EBITDA is also up a decent amount, but the thing that I like the most here is that EBITDA margin is up significantly. EPS is also looking good at $1.63 per share. And here we see the revenue breakdown. Collection is the biggest segment, representing 3.5 billion of the total 5.1 billion in revenue. The sub-segment commercial collection is also the biggest, with 1.4 out of this 3.5 billion. Landfill reported revenue of 1.2 billion, also being a big portion of the revenue. Recycling is the smallest segment with 366 million in revenue. The interesting thing is that it is also down year over year. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Waste Management is a 70 billion market cap company. PE ratio is at 30, indicating you pay a premium for the stock. Later in this video I will show you my 3 price targets for Waste Management stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 20 billion and in this graph we see that the revenue went up in the long run. The thing that I don't like here is that it's not always steady and consistent. It also seems that growth is slowing down a little bit lately. Margins are pretty steady the past few years. As a matter of fact, it is increasing in the past couple of quarters as well. To me, this looks pretty good. EPS is pretty much the same story as the revenue and the margins. The good part is that recently it is increasing again. Analysts expect that from here EPS will grow at pretty high numbers. To me this looks pretty good. For the revenue, analysts expect mid-single digit numbers, which is not too bad for this type of company, to be honest. Return on assets is sitting at 6.9%, which is a low number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 10%, which is a great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.84, which is a great number. It is also pretty steady historically. Right now, Waste Management has 15 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Waste Management has 150 million in total cash, so they can't pay down a big part of their debt. To me, this is not a good thing. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but most recently it took a big hit. Shares outstanding are decreasing in the long run, which is something that I really like. But you can argue if this is the smartest thing to do when the stock is at a premium price. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.61%, which is a decent number. Annual payout is at $2.8 and payout ratio is at 47%. I prefer 50% or lower, so right now they have 53% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 3%, which is not too exciting. They have 4 consecutive years of dividend increases, but this number is not fully correct. If you take a look at these numbers, the dividends paid since 2012, you see that Waste Management did increase the dividends at a decent rate. They paid a supplemental dividend, which Seeking Alpha cannot process somehow. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it is looking really good. The range of 45 to 50% is something that I think is good. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at the same rate as historically. Overall, these dividends look pretty interesting to me, but how about the historical returns? I decided to compare Waste Management stock with the overall market. In this case, the S&P 500. Next to that, I added RSG and WCM. On the 5-year chart we see that Waste Management beats the S&P 500 by a significant amount. In total, WM stock returned 104% versus 79% for the S&P 500. This result is including dividends. RSG had the highest return with 134%. On the 1-year chart things look pretty different for Waste Management, with only 5% return versus the S&P 500 sitting at 14.6%, and RSG is sitting at almost 20%. On the 6-month chart it is again looking interesting, with Waste Management returning 6% including dividends, and the S&P 500 is sitting at 9%. RSG is again beating everyone in this list with 14%. On the 1-month chart it is again RSG beating the S&P 500 and the others in this list. Waste Management had the lowest return. And bottom line, Waste Management beats the S&P 500 in the long run, but most recently it is lagging behind a little bit. So could this be the perfect time to buy Waste Management stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin and the free cash flow margin I'm putting in 11, 12 and 13%. For the PE ratio and the price to free cash flow I'm putting in 20, 22 and 24. It is a big company that is capable of growing in the future. They are also the market leader. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, Waste Management stock is at $173. I hit analyze and we see only red numbers. We have a low price target of $77. We have a mid price target of $104. And we have a high price target of $139. To me, the high price target is the most justified here, indicating that this stock is still overvalued. My final conclusion on this stock is that I love the business behind it. I used to own Waste Management stock back in the days and I made a good profit on it. Right now it feels overvalued to me. It has to be said that in return for this premium price you get a steady and consistent company that pays a nice dividend of 1.6%. It also has to be said that it is somewhat of a slow growing company that is not an exciting business right now. I don't expect dividend to grow massively since payout ratio is at already roughly 50%. For now I'm skipping on this stock. To me, the premium is not worth at this moment. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.